What's up, guys? Bulls and the Bears here with the weekly recap video. This past week, we locked up $283 in gains, and the account value, the market value, went up by more than that, by about like 600. And that's a result of the realized profits, but also just the unrealized losses that kind of came back a little bit this past week. So that's nice. That's encouraging. The account's at 21,200, and several moves were made. Quite a few moves were made. And this next week coming up is going to be pretty friggin' important because we have two major earnings reports, one with UNH and one with Roblox that we have positions on, and that could really bring the account one direction by a large amount or the other direction by a large amount or somewhere in between. So that's going to be big. But yeah, the account's looking okay, pretty so far so good, considering we just revamped this or restarted this only 3 weeks ago. So yeah, for 3 weeks, up already $1,200. We will take that. So let's get into the nitty gritty. So here are the open positions. We have United Health, Super Micro Computer, Roblox. We all knew about that. But two new positions would be TSLL, which are cash secured puts. If I click this, you'll see -2 here. So that's two cash secured puts sold for August 1st, 6 days away, and the $9 strike. That's how you kind of read this here. The $9 put, sold two of them. I'm short two of them. Expire August 1st. And right here is the trade price column. So I collected 13 cents. And the mid price column right here is what they're currently worth, which is about 4 cents. So that's already decayed quite a bit. The profit's already up $18. So that's 70% of the collected premium already locked up there. Might end up closing those first thing on Monday if it gets any better. And then the other new position is Webull. What? Webull? Yes, Webull, the brokerage. I used to use them. They IPO'd back in April. And I didn't even know about that at the time. I think I ended up figuring it out sometime in June. I was like, oh, I guess they're public. And then only recently, I guess they've been rallying quite a bit, and it piqued my interest. I looked at the options chain, very liquid. They're weeklies and everything, and the premium was very nice. So I decided to start a position. We're going to get into a little bit more later about why, even though I'm not necessarily so convinced that the stock price is going to keep accelerating like something like Robinhood's doing. I think the premium is going to make this a very worthwhile trade. And at the end of the day, it's also very cheap. So we'll talk about that after. A position you don't see here is Uber. I had that this week. I had it in the midweek update video. But on Thursday, I decided to close it for a small profit. And we'll get into why after. Here's the history of this past week. So this is everything I did. This is black and white, as transparent as it gets. Starting with the Roblox trades here, I guess I bought back some covered puts because they decayed, and then I sold new ones for next week. So I basically rolled these covered puts from 113 down to 109 for next week. Got a boatload of premium because of earnings coming up, so that's cool. Super Micro, I rolled some calls down from the 50 to the 48. Because this is the in the money strategy, so I want to make sure my covered calls are in the money. I had calls at 50. SMCI sold off. They were no longer in the money, so I rolled them down to 48, back in the money. However, I didn't roll it out. I rolled it down for the same week. And although it is a net credit, technically, I actually did lose money in terms of time value, which we can get into after. OSCR, I had a cash secured put open last week. I bought that back this week for a small profit. This is my closing Uber trade right here. Bought back the covered call, sold the leaps, done. I opened a TSLL put, two of them actually. Still have that open. I bought back for UNH, I bought back a covered call and then sold one for next week. They also have earnings, so I got a boatload of premium there. TSLL again. Okay, yeah, this was, I got a partial fill. So I tried to sell two TSLL puts. I only got filled on one of them initially, and then like an hour later or so, or 20 minutes later, I got the other one filled at 13 cents. Super Micro, the covered call that I opened down here at 48, I then bought it back because SMCI rallied again, so I bought that back and then sold one for next week at the 49 strike. I had said I was looking to let this trade roll off the books this week, but I'm going to give it one more week because of kind of a user error of me mismanaging my covered calls and therefore losing some profit potential. So I'm going to give it another week to try to get that back. And it's already looking pretty good. And then Webull, I bought a couple leaps here, $763 a piece, bought 2 of them, and sold covered calls against them. So those are all the transactions. Let's get into TradingView, and we'll take a look at some charts and exactly what went down. First of all, let's talk about SPY and the market. Well, we had another green day, another lifetime high on Friday. Good way to end the week. If we go to the weekly, we rallied about 1.5%, which is nice because the last few weeks we were kind of flat, going sideways. 3 weeks in a row, struggling to really push new highs, but not necessarily going down either, mostly sideways. And then this week, boom, broke out to that new level rather strongly and finished at the highs basically. So this was like the past couple weeks, not really moving much higher, and then this week just boom, broke out, which is great. I mean, we're wheel strategy traders. We are generally long, and we want the markets to go up. We want our stocks to go up. So I'm not complaining, but you have to be a little bit weary of how much longer this will last before we get an inevitable 5-10% pullback. We're overbought right now. The RSI is 75 on the daily. Hasn't stopped it before. It was oversold here too on July 3rd, and that's when we went sideways, but we never really pulled back. And then the RSI went back to normal, kind of. But I mean, this, I don't even really have to explain why I might think a pullback 5%, 10% could come at any time. And honestly, over the last 5 years, I want to say like September is historically the worst month of the year. And I know a lot of times we tend to pull back in the fall. Let's see. I don't know if this past one was an example. I guess last year in 2024, July 15th was the high, and then we bottomed on August 5th. So we're kind of past that date already. And I guess last fall in 2024 was relatively strong. But before that, I mean, 2023, we had a big correction here from July 26th, which is today, Saturday, to October 27th. So 3 months we corrected after a really nice strong push off the bear market bottom, where we just kept going higher and higher and higher. It wasn't until the end of July where we actually started to correct, and it lasted 3 months before we bottomed. And this was a healthy pullback, but it can be painful if you get into the wrong thing at the wrong time. And then that was 2023. Let's see, 2022. Well, that was the bear market in general. So yeah, it was we had a bad fall in 2022 as well. That bottomed in October. 2021, this was post-COVID rally, insane rally, to the point where it was just like trickling higher every single week. Minor pullbacks, minor dips that only lasted maybe 1 week before they came back up. It wasn't until September, the very beginning of September, where we started to correct a little bit, and it bottomed out in early October. So that just makes me think, the fall, relatively common time for markets to pull back. You have the seasonal element, maybe big money's just away for the summer, not really very active. And then when the summer ends and you get towards September, they start to be more active, maybe take their gains from the summer rallies and move the market. And just given the strength of this move and the time of year that we're at, it's kind of lining up to where you might expect that correction as we approach the fall. August starts next week, next Friday. So, it's just reasonable to expect something soon, or at least to prepare for it. So, but if it doesn't, if we want to keep going, I'm all for it. I'm not going to stop trading. I might elect to have a little bit of a bigger cash position, not be 100% invested, but I'm still going to be invested in some respect. So I will take it as long as it wants to go, for sure. So we'll get into some trades. We'll start with Uber, because it's kind of a good segue for this. As I prepare for a potential market correction, market pullback, I would rather be in positions that are at support and therefore not necessarily at a high, where if we do get a pullback, it could be a deep one that I'm buying the top of. Now, obviously, stocks, even at support, can still pull back further if the market corrects, but I just feel like stocks that are high flying or not necessarily at support, they have more room to fall than stocks that are already depressed and at key support. And I wouldn't feel comfortable with my initial entry in that situation. So, if you're not feeling comfortable as a trader, then you got to move on. Even if another trader might be very comfortable with this trade, even with a pullback, I wouldn't. So therefore, this is the move I'm going to make. So I bought Uber over here on the 18th, around $91. It dropped at first, but then it came back, and then it dropped again, and then it rallied nicely pre-market, and then it came all the way back down, and then on Thursday it went up, and I was like, okay, I'm getting out of this thing. I was like, this is a really nice surge. It's at a level that it hasn't really been at, or a return to this nice pre-market level around 92.50, 93, and I was up over $100. Again, I just explained how I wanted to get out of it. I thought that was a good opportunity, so I pulled the trigger. It ended up coming all the way back down that day, and then moved lower on Friday, so I guess that was a solid idea, in the near term at least. We can see the life of the trade where I bought the leaps at 32, sold them for 32.72, and the covered call I sold for 40, bought back for 12. All in all, $100 flat in profit on Uber for just a 6-day trade, less than a week really. So, it is what it is. Moving on to Oscar. So I sold a put at $11 on Friday, and I remember telling you guys that I thought that was easy, almost guaranteed money. I collected 31 cents at the 11 strike. I sold it on this day right here when we dipped pretty hard on last Friday to a recent low around $13. I sold it at 11. I thought that was an amazing strike. We're talking about below the current support level of the past year, like below all of this is where I would start a position. So if I did somehow get a sign down there, that would have been an amazing starter entry, but I really didn't think that would happen, and I said it would just be easy money, and sure enough, it was, because we rallied back up to almost $16, and I closed it. So back to Tasty here. So it was this one right here. I sold the put for 31 cents, bought it back for 5, profited $26 on Oscar. We'll go to Roblox next. This is my short position. I bought puts expiring in November, which is not a ton of time, given how I like to have a year on my leaps, but at the same time, 3-4 months actually is a lot of time. A lot can happen in 3 to 4 months. But as I explained in my midweek update video, I sold puts for next week when it has earnings. So I'm basically locked into this thing because the volatility is not going to come down on these covered puts that I sold until earnings happens, because that's the big volatile event. So as long as that hasn't happened yet, these premiums are going to be elevated, which means these covered puts are not going to decay much, which means it's going to be very hard to exit this thing for a profit until the volatility comes out. So I'm basically locked into earnings unless it really collapses before then, and it would have to collapse hard down to like 108 or something, 107, which is possible, but which sucks, because had I not sold those puts, I would have been able to get out of this thing right here on Wednesday, as I talked about in my last video. But the covered puts I had sold previously, they were so far in the red after this drop that my net position was still red by about $500. So there's nothing I could do. I still wanted to hold on to it and ride it out into next week. And here we are. It did pop up after that, got back up to 121, but then sold off to close Friday. So I'm liking this weakness here. I definitely want this thing to stay low. The last thing I want is for this to go back up to like 130 or higher. And unfortunately, I have to wait for earnings, which could propel it up to the moon. But as it stands right now, given the premium I collected and where I'm profitable, again, like near like 120 to 115, like this range right here is kind of the Goldilocks zone. I'm great here. Lower than this is actually even better. So maybe not the Goldilocks zone, but it's a safe zone, and it's where it has been trading the last few days. So if it stays here, after earnings, then we're good. Any higher than this, then we might have to work the position a little bit longer. Any lower than this, then we're golden. We should profit nicely. Earnings is Thursday morning. So after the midweek update video, but before the weekly recap, we'll see what happens there. But really, there's nothing more to do until earnings happens. I have puts sold at 109. I collected $288 a piece, and I sold 2 of them. So that's $576 in credit I stand to collect next week. That's huge. So if I can get all of that, that's going to go a long way into helping this position be a net profitable one, even if it does go up a little bit. But we'll have to see what ends up happening. United Health is kind of the same situation. I'm not shorting it, but it has earnings. And I'm collecting a boatload of premium on this one too. I have the 320 call sold up here. I collected $337. And I opened that on Wednesday when we had a really strong push. We were at 289 or so. I think I opened it around here. So I bought back a covered call that I had opened for this week. It was at 300. I bought that back because we were close to the end of the week and it wasn't really being threatened. So it decayed, bought it back for profit, and then sold one for earnings at 320. It pushed a little bit higher that day and closed at 292. And I bought at 285. So my position was profitable by about $400. And I'm like, this is great. But I'm not going to take it off because I think this thing can go to 320. Normally I would take it off after a nice move like that. And then I'd pay the price later because the stock keeps going and I never gave it a chance to keep going. So this time I'm not going to take the profit. I'm going to sit tight, be patient, and let this thing work. Well, I got punished for that because the very next day it went from 292 to 279. And then the day after that, it dropped to 273 pre-market on Friday, popped up thankfully, but then finished down at 281. So I went from plus 400 to down, I think $70 right now is what I have for an open position. Yeah, right here. Down 73 net right now. I had plus 400, now I'm red. So the market is not helping me mentally let these positions work. This position right here, the way this just moved against me, proved or reinforced my idea of taking profits while I have it. Now, there's so many examples of that not being the right decision. Almost every single trade I've ever done with the wheel has moved higher after I exited. And had I just given it more time, been more patient, I could have made a lot of money. Which is why I'm really trying to let this one work. And I have so much time. I have all the way till June of next year, so there's no need to close it so soon. But when this happens, when I had 400 in my hands and then it goes away, that really hurts. And it does not help the case to let these positions work. But it's okay. We got time. We've collected premium. And there's still a lot of upside potential left in this thing. And it could go right back up in just one more week, especially after earnings, which is Tuesday morning. So pretty early on in the week, we're going to have earnings. Honestly, could go either way. This thing is in hot water right now with fraud investigation and changes in Medicare and stuff like that, and just scrutiny among their insurance practices, and they're rejecting claims and stuff. There's a lot of potential for this thing to be on the struggle bus for a while. But who knows? Earnings, maybe they say something favorable. It's already super depressed. And in a situation like this, if on the earnings call there's some good news, maybe guidance isn't as bad as people thought, or they give positive feedback on how things are going and their expectations, something that is this extended and this punished could quickly snap back to the upside on any type of good news. To the point where it could go up like 15% for all I know. I'm at 320, which means I have about, right now, 13-14% of upside. But at the same time, if it's more negative outlook and maybe they pull guidance or they revise guidance even lower, this thing could drop 15-20% again. Who knows? But I'll be ready for it. I'll add to it. And I believe that within a year, this thing can make another strong push. I mean, every stock has its day in the sun, and I think a year is plenty of time for to allow for that to happen. TSLL, the Tesla 2X fund ETF. Obviously, I can't play Tesla. It's just too expensive for my revised account, being as low as it is now. But I could always play it through TSLL, and that's what I've kind of been looking to do. Tesla dropped after earnings, and I decided to sell a put against TSLL, 2 of them for next week at a 9 strike, and it ended up popping up on Friday. So these puts are looking safe. I might close them as early as Monday, and for a nice 80-90% profit on the premium collected. So that's cool. Nothing to worry about there. Supermicro Computer, this one's looking better now, but during the week we did have a pullback here, and I had covered calls. Look at this green line here. I had covered calls at, or an in the money call at 50. At 50, and I want these calls to be in the money. But on Tuesday, we dropped hard down to 49, and these covered calls were no longer in the money, so I decided to roll them from 50 down to 48. And I kind of did so in a poor fashion to where I actually lost money. I actually lost out on time value, or gave back time value to do that roll. So that was negative for my overall position. I then ended up going back up anyway, so I did not need to do that. I did not need to give up time value premium in that maneuver. I could have just left it at 50 and had a great time, but it faked me out a little bit. As it rallied, the time value left in these covered calls went down to like $5, and that's all I'm after with this time value, just like a cash secured put would be. So I bought that back and then sold new ones at 49 for next week, collecting even more time value. So here we are. SMCI is at 54. My covered call's at 49. Plenty of buffer room there. As long as it stays above my covered call of 49, we're good, and we stand to profit our max potential. And that's a lot of buffer room there, so I feel pretty good. And I'm willing to let this thing go next week if I get assigned here at 49. I'll be perfectly fine with that, and we'll get our max profit. And just to show you guys in more detail, I'll bring up the Excel file. So here's all the details of the position here. I originally bought 100 shares at $46.92, so that cost me $4,692. And then here are all the covered calls that I've opened. Sold one at 44, bought it back, rolled it to 47.50, and I bought that one back. Sold one at 50, bought it back, sold one at 48, bought it back, sold one at 49. And that's open for next week. Along the way, though, I've been buying these back for more than I sold them for. So I sold the 44 for $336, bought it back for $689. So I lost a $353 loss. Like a real loss. I collected $336 and paid $689. However, if you only look at the extrinsic value on these trades, which Tasty Trade does show you, has a column for it, has intrinsic and extrinsic, and if you keep track of that when you open and close these positions, it all makes sense. When I sold this 44 call, it had $46 of time value in it. When I bought it back, it only had 9 cents of time value. So I profited 37 cents in time value. It's hard to see that I profited when I literally took a $353 loss, but that's because that's being offset by the appreciation in the base position up here of my 100 shares. So the only difference is this time value piece, which is a positive 37 cents. Then I sold another call here, collected 409. The shares went higher, the stock went higher, and I bought it back for more than I sold it for, $633. I realized a $221 loss. But that's offset by my appreciating shares. The only difference is the time value. When I sold the call, I collected 79 cents worth of time value. The rest was intrinsic. And then when I bought it back, I only paid 5 cents of time value. The rest of this premium was intrinsic. So another profit. Then I sold the 50. I collected 440. I bought it back when the stock dropped. The stock dropped, so I bought the covered call back for cheaper than I sold it for. So technically, I realized a $296 profit. Collected 440, paid $1.44 for it back. That's a profit. However, when you look at just the time value piece, I actually lost money. I originally collected 65 cents of time value on this call, but when I bought it back, it was $1.37 of time value. So I actually lost $72 worth of time value in that maneuver, which is a mistake on my part. I shouldn't have done it that way. I either should have let the stock work a little bit longer before rolling it, or rolled it to the following week as opposed to the same week. But I decided to roll it from 50 to 48 with in the same week, July 25th. And I collected 269, and which was 60 cents worth of time value, and then I bought it back on Thursday for $444, another realized loss of $175, but technically a $52 profit or capture of time value. Kind of confusing. And then this next one, the one I have open now, I collected $406 of premium, but of that premium, only 70 cents was time value. The rest was intrinsic. And the intrinsic doesn't count because that's being completely offset by my shares, for better or for worse. The only true gain or loss is from this time value column that I'm manually keeping track of. And right now, if I add it all up and the trade ends here, I get assigned at 49 and I don't do any more maneuvers, this all adds up to a positive $161 in time value, which would be a $161 profit. If that's a little confusing, we can do it this way. Let's just do the raw math of getting assigned on my current covered call of $49. $49. If I get assigned on that, I'm selling my shares at $49. I bought them for $46.92. So I'd collect $4,900 in proceeds by selling my shares at my covered call strike. So this would be a net profit on the shares of $208. If I add all this up together, this ends up being a loss of $47. And I can just show you here. Add all this up, it equals negative 47. But up here, this plus this, I'm gaining 208, but I'm losing 47. So if I go 208 plus the negative 47, you get $161 net profit, which is exactly what all of this time value adds up to be, $1.61. So it all makes sense. If you just keep track of the time value, or you just always do the raw math of what you paid for and all the premiums gained and lost, it's always going to be the same thing. You're truly just going after that time value. So kind of confusing concept if you're not really familiar with it, but I hope that kind of explained it a little bit. And then the last position is Webull. See, you can see here it opened, IPO'd around April 8th, had this massive 374% green day, and then it came all the way back down, chilled around $10 for a little while, and then just recently, basically the end of June into now, it's had a nice surge here. Now that could just be the mania of this bull market that we're in. This company's worth at this price about $7.8 billion in market cap. Like as a trader, I like Webull better than Robinhood, like their platform, but as a company, Robinhood is just way ahead of Webull. It is, they're doing great stuff with crypto and credit cards, and they're getting into like loans and stuff, and they're really excelling. Robinhood is. Webull is kind of behind the curve with that stuff as a fundamental company. So I don't necessarily expect this thing to just start surging up to $40, $50 and get another Robinhood move. I do think it could easily come back down to $10 or so, unless Webull really picks up the pace here fundamentally. But to me, on one hand, this could easily keep going. This mania in the bull market could continue, and this thing really does push higher to like 20 or 25 or something stupid. Obviously, it would be irrational and overvalued, but the market can be irrational longer than you can stay solvent. This thing could keep going. So I do have that, in my back pocket there, and I could get a nice profit. But even if it doesn't, this thing, the premiums right now are so large that just selling one covered call for next week at the 2050 strike way up here, well above my point of profitability at 1650, it's about $4 of upside. Those calls, I collected 60 cents. And for the leaps, I paid $7.63. So that's a huge percentage of my net cost. So if I collected 60 cents and I paid 763 for the position times 100, that's a 7.8% return in 1 week. I'm recouping over or almost 8% of my original costs in just 1 week. That's insane. So like that alone made me open this trade. I'm like, wow, like how much downside can there actually be if I'm already recouping 8% of my costs in 1 week? And these leaps go all the way to July 17th. So I've like truly a year left on them. 52 weeks of premium worth to collect. I'm already capturing 8% of my costs in just 1 week. So I have 51 more weeks to recoup the remaining 92% just to be like guaranteed break even. That's like if the stock goes down to below 10 and I lose my total investment on my leaps, which is rare. That is not, I'm not going to let that happen. But even if it did, you know, I could recoup that in total cost and be fine, given the way these premiums are. And then next week, I believe it has earnings, so we're going to have more great premium to collect there and get back another huge percentage of our cost. So just a really good opportunity in my mind to just collect a really good premium and therefore reduce our risk by recouping our cost. And that's just applying the downside. That's just thinking about the downside potential. If it really does come back to 10 and it gets weak again, at least we've collected a crap ton of premium to hedge our loss. But if things stay good and it keeps going up to 20, then we're going to make a really good profit. So to me, this is a pretty solid opportunity. And if I go to the options chain, it's a very nice options chain. We got weeklies, which is exactly what we want. It does not have earnings next week. It's actually the end of August, so that's my bad. But I can open this next week's options chain here. You know, plenty of good premium. The stock sold off on Friday, so they've decayed quite a bit. But pretty solid premium. I could even roll it down and get more aggressive and pick up even more premium for the same week. It'd just get crazy and increase my return on investment there. If I go to the end of August, where it has earnings, solid premiums here, you can get $1.50 at the 19 strike, and that would reduce my cost from $7.60 down to like $5, $6 in just a month. You know, never mind the rest of the year where we have 3 or 4 more quarters of earnings volatility to siphon from. I just think there's a good opportunity here. Basically low risk. I think even if the stock doesn't go my way, I can reduce my risk significantly through these really good premiums. So in summary, if I bring up my Excel file here, these are the profits I locked up. $283, just a Roblox put, Oscar put, Uber closing of the call and leaps, and then a United Health call, all bought back for profit. And then if I go over here, you can see next week, between Roblox earnings, United Health earnings, my TSLL puts, and my Webull covered calls, we stand to collect over $1,000 in premium, mostly because of these earnings up here. But even Webull is offering a nice chunk too. Over $1,000 of collected premium for next week that we could realize in gains if everything goes our way. That being added to our current profit on the month of almost $1,500 would, you know, that brings us to possibly, or almost certainly, a $2,000 month. Possibly even better if both Roblox and United Health go our way and we end up closing those trades for like crazy profit. This could be very good. But even if those trades don't go our way, we stand to collect that premium no matter what. So we should clear $2,000 this month, easy, in realized gains, which is crazy. For our first week back with our 20K account last year, when I started with 20K, I was getting $500 months, and that's good, and that's what I expected. But I wasn't trading leaps. I wasn't leveraging options to the fullest extent. Now that I am, I'm able to really accelerate these profits, so hopefully I can pick up the pace even better than the pace I was on last year, and we can really catch up to our 5-year goal here and make back those losses that we had. So that's it, guys. That's going to do it for the video. Thank you all for watching. If you enjoyed, hit the like button, subscribe for more content, and I will see you all next time.